Hello, everybody. It is the 15th of October, 2010, 9:46 a.m., and silver's in a nice little bull market, but you already know that. And we're seeing a little bit of sell-offs, selling today. Let me just draw it in here. It's something like that. That's all it is. We're down to $24.36 right now, as of 9:45 a.m. And the action that silver has encountered has been majorly bullish. We broke this trend line last Tuesday, showing that we were going to become more bullish than we already were. We were in this range where we found resistance for many weeks, going from $18 an ounce over 22. That was a very significant gain of well over 20%, and now the gain's well over 30%. Found support at the support line, which was resistance, support, or resistance becoming support. And then, of course, it had a significant move higher in towards here. So the bias is still towards the long side. Just because the chart looks like it's up too much doesn't mean it can't continue to proceed higher. As long as there's people willing to be buying and less people wanting to sell, therefore more people wanting to buy and sell, the market will continue to go higher, whether it's overbought or oversold, because it's a conflict more than anything. The shorter term charts, these ones in here, say, oh, it's way overbought. Yet when you look at the longer term charts, the inflation adjusted charts, it is way oversold. So you have conflicting results. If this chart starts to roll over, maybe we pull back down to 22.5 or something, then it will no longer be overbought on the shorter term time frame, and it will still be way oversold on the longer term time frame. If we continue a secular rally, then we go up to say 28, 29. Basically, we end up having massive moves towards the upside. Then it will be still overbought on the intermediate time frame, and most likely still way too low on the longer term levels. Now you're going to start to notice people talking about silver just a little bit more. It's going to grab people's attention as it moves on the way to the upside. Now, at any point, this thing can start to roll over. But as long as you have a rising 5-day moving average, all sell-offs that this market encounters is guilty until proven innocent. And we're still well above this 5-day moving average right now. The 5-day moving average is around 23.60 or so. Silver's at 24.1/3. So there's a big price differential. You can take Fibonacci from here to here, and just by eyeballing it, then 23.70 or so should be an area where support can be had. And then if we do areas of previous resistance, well, the last major resistance that was established was roughly here at around 23.1/3, 23 2/5 as the last resistance level. So a move to 23.25 would be about 4%, and yet that would be a healthy pullback. And that would be the first time we would go below the 5-day moving average, but it's not often that you can hold the 5-day as long as it has, meaning when the 5-day does start to flatten and decline, then the continuing sell-off would still be guilty until proven innocent, because we have a rising 50-day moving average, a rising 10, rising 20, rising 100, all of these rising VWAPs, and the consolidation from this period down below here, 18, as long as it holds, 38.2% of its difference from this high, then it would still be in a bull run. Bull run meaning positive, meaning likely to go higher. And thank you for watching, and have yourself a magnificent day. Bye-bye.